If we get a pullback, which I think would be good, healthy in the silver price, we could we will very, very likely get it in the miners as well. And that doesn't worry me. It doesn't scare me. I think it'll just lead to some good buying opportunities. And once they have bottomed, that's going to be a fantastic time to sort of jump in, in a more meaningful way. And I think the market will continue to stay very healthy and very strong. The financings have been off the charts. You have a great point, which is that the financings are not only closing. Sometimes I hear about things, and then uh, I'm shocked, but I shouldn't be that we're hearing about some of these financings, and I'm hearing about some people are saying, well, did you hear about this? Do you know if there's room, whatever? And I'll find out, I'll ask, and then the company will tell me, oh, that we opened that financing yesterday, it was closed at the end of the day. And it was oversubscribed. Sometimes some of these things are oversubscribed 2 and 3 times, so they could raise 2 or 3 times the money that they had intended to raise originally. Um, then they'll turn around, and of course if it's reasonable, they'll take more than they had originally planned. So they'll upsize the financing. Sometimes it's 20%, 30%. And then on top of it, there is an over allotment that's available to the broker that's helping them to raise the money, and those get completely exercised as well. So you could go from, let's say you're raising 10 million, you could easily be at 15 million by the time this closes, and it could take a matter of a couple of days. So it's been very, very hot. There's no question about it. I think that's going to continue, and it's not completely surprising, frankly. Silver has almost doubled from the end of February last year. It was, I think, $22. We've been to 42, 43 in the last few days. So on that basis, not surprising at all. And I think that it would be unreasonable to be surprised that these juniors are taking advantage and raising money. And frankly, at 40-ish dollars, let's say in silver, even honestly at 30, high 30s, 35, 37, $38, they can make some really, really good money mining silver. And so that makes them that much more attractive, makes the juniors attractive to the developers and the seniors, and it makes producing more attractive to the producers. They look for ways that they can expand production. They're more willing to spend money on exploration, especially brownfields that's near existing infrastructure, so they could bring that into production sooner. The financings are there; they're hot. I think they will continue. So we're going to hear more about this, and it's just going to it's a small space. It's going to remain, I believe, small. Silver is quite niche. And that's what, in my view, makes it attractive.
How valuable or quality, I guess, of finding a company now if they're close to that production, as we've just laid out a map that the demand for silver is obviously not going away. That if you can find a junior that's close to production, like what's, I guess, a great setup for that.
I mean, that's a good point. That's something that's frankly not typical of juniors to be close to production. Most of them are, in the business of, and it's understandable, but most of them are in the business of issuing shares to raise money and inevitably dilute existing shareholders. It's all fine when, you're in a really good market and the silver price keeps going up, and everybody forgets about that, in a matter of days or weeks, because that raise is an afterthought and the dilution's an afterthought, and the price is quickly higher than the small dip it took after the raise was announced. But we will have periods where we get back to reality, and that business model weighs on people, and maybe the silver price stagnates for a little while. So a junior that is set up to be able to produce and to bring some serious cash flow is very attractive. And there are very few like that. One that I like is ES Gold. They interestingly just about 2 weeks ago announced that they had updated their PEA on their Montauban project, which is in Quebec. And it's tremendous. I mean, the after-tax IRR on this thing is 60%. The payback period is less than 2 years, and the pre-tax value of the project is $44 million. The pre-tax IRR is 105%. So this thing pre-tax will pay itself back completely in less than 2 years. So and so they are probably a matter of a few months away from production. So that's going to be tremendous for them. By the way, the price that they assumed in this revised PEA was where they had revised the prices of the underlying commodities. So this is with a revised price of gold to 2,900, we're at 36, and a revised silver price to 31, and we're at 41. So that means that these numbers are actually still low in this revised PEA, and that the IRR technically at current prices are a lot higher. So it's very, very compelling. They've been pretty aggressive in the sense that they've raised some money. They are now spending on doing exploration besides, building the plant that's going to process these tailings and start flowing a lot of cash to the company. They've also announced that they're acquiring a project in Colombia that is going to be sort of a sister project to what they're doing in Quebec, processing tailings, which is fantastic actually for not only them and shareholders, but it's fantastic for the environment, for the community, because they're basically doing a cleanup process. And so they're going to copycat this, carbon copy it, I should say, in Colombia. And they've made that announcement, and it's something that they can duplicate on and on in all kinds of places across Canada and elsewhere. So I see, this is very compelling, a lot of growth, and because of their pending, their near-term cash flow, they will not need to have to go back to market for, I think, quite some time. Because of the cash coming in that will feed all these different avenues they have to expand.